Good morning still. There's been discussion of a new stress test as it relates to our financial institutions. I guess the question comes, was the current test good enough? Do we need a new one? And would either of this kind of stress test helped us understand or prevent these issues when all these issues took place with your acquisition?
I do think the stress test was a good one, and I think the fact that they probably used higher standards in terms of things getting worse than hopefully they will was helpful too, because those things can happen. And so I would, I think I know it's caused us to look at to look forward with a greater sense of pessimism, or greater sense of things could be worse than we actually think they are, and so you should have higher buffers of capital, and that will show up in our internal objectives going forward. So I do think it was a very good thing. I don't see any evidence, particularly as we talk about there being some signs that the economy may be improving somewhat, to put another stress test on top of that. If you think about the last 2 years, the industry had gone through a significant stress test in actuality, and then we were getting a stress test on top of that. So I think that's enough.
But you know what the stress test was that we just went through.
Right.
If Merrill had gone through that stress test and you had gotten the results prior to the board's vote, would it have affected what your board did?
I don't know if the stress test, of course, came after the fact of all of this happening. What we didn't project, and what nobody that I know projected, was the severity of the credit crunch or the credit crisis that occurred during that fourth quarter. It wasn't that we hadn't identified the instruments. We just didn't see the depth of the decline that happened during that quarter, and most people didn't. So to answer your question, if in fact we had been able to predict that, no, we would not have done the deal because the hole would have been too big.
So you don't think that this stress test would have indicated the problems that Merrill was going to face because you couldn't have predicted the fourth quarter collapse? No, sir.
I don't know of anybody that would have predicted that, and actually you can see some evidence of that in the fact that virtually every major bank had an operating loss in the fourth quarter, and even the financial analysts were not predicting those losses, prospectively.
Sure. Switching ground just here for a second. Questions. You also acquired, with that acquisition, a significant ownership in BlackRock?
Yes, sir, 49.9%.
Okay. I'm aware they do have contracts with the Federal Reserve and the Department of Treasury, BlackRock?
Yes, they do. I think they do. We don't manage them, but we
what?
don't manage the company, but I have heard they do have contracts, yes.
So you may not know then, were any of these contracts given to BlackRock in furtherance of financial support to Bank of America from the government?
No, there's a big distinction in the management of the two companies, and we in fact make it a point not to be part of the management team.
But you could see the potential for a conflict of interest then. You have to have some control over them.
We actually don't, but I do see the cosmetics of the potential conflicts.
And cosmetics are becoming important.
They certainly are, yes, sir.
So how do you avoid even the appearance of conflicts or impropriety in that vein?
Well, you make it very clear in terms of how the company is managed that you have nothing to do with their management. And it is pretty clear in the bylaws of the company that we do not manage the company.
Very good. Thank you.
Right. We now go to one of our senior members in Congress in terms of service, not age.